we've sort of followed you as we've gone through the end of last year and now into the new year. I wonder what you make of this run, if you think expectations have been set low enough as we now await some Q4 earnings prints.
Oh, I think they have. I mean, that was the worst December in history. So I think that we're going to see a moderate January, and at least expectations have come down from where we were in August and September, where they were euphoric. So maybe now they're a little bit more realistic.
So has anything happened with the balance between equities and fixed income?
In our case, we thought that equities were overpriced back in September and August. Now we think they're more realistic, so we're actually feathering back in to keep in our asset allocation range. Just like Rick Santelli's chart showed of the double top, we've liked bonds throughout most of 2018. We're a little more cautious in 2019 and have used that double top to take some profits in here. But as he just showed, we're not quite sure how low rates can go before they bounce up. But the trend in 2019 is going to be for higher interest rates.
In light of that, Chris, and you mentioned that you're feathering back in, I think is the term you just used, to the equity markets. What do you see as attractive opportunities right now?
Well, Morgan, when we come into the market, we're buying the entire market. So we buy the Russell 3000 index as an entire block. We're almost 70% passive in the USA. We also have been keeping our eye on international. I mean, it's been so weak in Europe, and Japan has just been flat throughout the year. So we think there are going to be opportunities, but those economies are still almost in recession mode, and the markets are certainly in recession mode. We're also keeping our eye on the emerging markets. The question is really about China and its economy. So for us, we want to stay invested. We're naturally long because I have a 30-year investment horizon. But the question is, how do we gauge that? We've got some exposure, but I'm not really ready to ramp up and put risk on in this kind of an environment.
What do you think the credit markets are telling us right now? We just had this data from Dealogic showing that we had no junk bond issuance in December, first time that had happened since the financial crisis, and that so far for 2019, for investment grade bonds, it's the slowest start to the year also since the financial crisis.
Yeah, Morgan, from our perspective, fixed income we think was attractive, but we're concerned that rates are going to climb. The high yield bond market is so compressed, yields are so tight in credit, investment grade credit, and in high yield. I think that market's treacherous and one that people have to watch. We know the Fed will probably tighten at least once and twice somewhere in 19. So rates are going to go higher, and that's going to weaken the bond market. I don't think it's going to be negative, a huge negative number, but I don't think you should expect a giant return out of fixed income. You got a window of opportunity when you had that double top, but we think that bottom line is going to hold in terms of yields, and they're going to start rising, which is bad for prices.
We spent a lot of last year talking about FANG, and specifically Facebook in your case, Chris. I wonder, let's game out. You get some kind of deal with China before March. Do we actually return to an era in which, like last summer, there's just euphoria surrounding those 4 or 5 names?
Well, Carl, first I'll take the beginning assumption you made that we get some kind of a deal with China. We're optimistic today. We like what we hear. But boy, the uncertainty in these trade talks has just been crazy. The way this is negotiated just it's not rational. Obviously, the negotiators are finding some balance, but then it's got to get to that Oval Office desk, and then who knows? I don't know that they return to the optimism that we saw last summer at all. But I think what we're seeing is some more realistic growth. America's got to realize that China really does matter. It's the number 2 economy in the world. And so when they slow down, and it's hard for us as investors to gauge how much they're slowing. We can't trust the economic statistics. There's not a lot of good measures, but we've really got to watch that. So I don't think they return to the euphoria that we saw before. I think that was overblown, but at least maybe now we're more in realistic views about how those companies are going to grow. You guys have said this morning the earnings forecasts are going to be more measured than we've seen in the past.
Do you think that's why the Russell 2000, the small caps that tend to be more U.S. focused, have been the best performing index so far to start off 2019?
I do, because small cap stocks really are the growth engine of the USA. And you've seen them at times really outperform and then really underperform. So they were due for a block period of good, strong performance. And when you look around the world, there's not any GDP growth other than in the USA. So we've seen the growth now. It's going to be a struggle, though, I think, in 2019. I can't forecast that they will outperform the large caps. The large caps struggle from the global economy being so weak.
One last point, Chris, on Facebook specifically. You've been critical, back above the 50-day, and decisively this time. That's kind of new. What do you make of some of these predictions that, I don't know, there could be a management change or at least change in board structure, or even just that a change in sentiment could really lift valuations once again?
Well, sentiment drives that kind of a stock. But I think from our perspective, it's the board change. That's what we really need. We need a stronger board over management, so there's more oversight of the company. I mean, they really have very serious problems. They have impacted global social issues, and people have used their product to affect change in politics. And I think they have to take some responsibility for that. I'm glad that it's above its trading average on a 50-day range, but the question is, what's the next news story to come out about that stock? So to us, it's an absolute governance discussion, and the governance has to change at the top, at the board level. They've got to step up and take more control of that company and be more responsible for how their product is used by outsiders.